Welcome to our channel where we explore the world of finance even when the market is volatile. Today, we will hit that subscribe button to stay connected with us and never. You might be wondering, what are dividend stocks? Well, these are shares in a company that pays a portion of its profits to shareholders, that's you, on a regular basis. These payments, known as dividends, can be a great source of passive income and a way to grow your wealth over time. They are an important part of a balanced investment portfolio, providing steady income even when the market is volatile. Today, we will be profiling 4 companies that have consistently paid dividends: Target Corporation, StarBucks Corporation, American Express Company, and Lowe's companies. So, buckle up as we take a deep dive into these 4 dividend stocks that could potentially boost your investment portfolio. Thanks for tuning in, viewers. If you're finding this content valuable, there's so much more to come, filled with even more amazing tips, tricks, and inspiration. Make sure you hit that subscribe button to stay connected with us and never miss out. And while you're at it, drop a comment below and share this video with your friends. First on our list is the Target Corporation, commonly in the 20th century, and it was not until 1960 talk numbers. In the world of investing, Target's pursue its upward trajectory. Now let's delve into the S&P 500 that have increased their dividends for highest ever annual revenue of over $75 billion before making any investment decisions. However, with its begins in the year 1901, when George Draper Dayton founded the Dayton Dry Goods Company in Minneapolis, Minnesota. The company steadily expanded throughout the 20th century, and it was not until 1962 that the first Target store opened its doors. The goal was simple: to provide customers with a discount retail option without sacrificing quality or shopping experience. Fast forward to today, and Target operates over 1,800 stores across the United States. It's the 8th largest retailer in the country, and its success story is a testament to its ability to adapt and evolve in the ever-changing retail landscape. But let's talk numbers. In the world of investing, Target's performance in the stock market is a crucial part of its profile. Over the past decade, Target's stock has seen some impressive growth. The company's market capitalization, which stands at over $80 billion, has more than tripled since 2010. Moreover, Target has proven to be a resilient player amidst market fluctuations. Even in the face of economic downturns, such as the Great Recession of 2008 and the recent COVID-19 pandemic, Target has managed to pull through and continue its upward trajectory. Now let's delve into Target's dividend history. Since going public in 1967, Target has paid dividends to its shareholders every quarter. That's over 50 years of consistent dividend payouts, a feat not many companies can boast, but it gets better. Not only has Target consistently paid dividends, but it has also increased its dividend payout every year for the last 53 years. This makes Target a member of the elite group of dividend aristocrats, companies in the S&P 500 that have increased their dividends for at least 25 consecutive years. Target's dividend yield, which is the annual dividend payment divided by the stock's current market price, currently stands at around 1.6%. While this might not seem like a high yield, it's important to remember that Target's consistent dividend growth and strong performance in the stock market contribute to its overall total return. In terms of financial milestones, Target achieved a significant one in 2019 when it reported its highest ever annual revenue of over $75 billion. This was a major accomplishment, demonstrating Target's ability to drive sales and increase profitability. So, what does all this mean for you as an investor? Well, Target's strong financial performance, consistent dividend payouts, and ability to adapt to market changes make it an attractive option for those looking to invest in dividend-paying stocks. Remember, investing always comes with risks, and it's important to do your own research and consider your financial goals before making any investment decisions. However, with its long-standing history and proven track record, Target presents a compelling case for consideration. Target's consistent performance and robust dividend payouts make it a contender for your portfolio. Next up, we have the world-renowned coffee company, Starbucks, 3,000 stores worldwide. This phenomenal growth, but what about dividends? Well, Starbucks for the fiscal year 2024 was over 20 positive sign for investors as it reflects the company's Starbucks Corporation has a compelling history, solid. As we move forward into the next scene, we'll be diving in. First Starbucks store opened in Seattle's Pike Place market. Fast forward to today, Starbucks has expanded its footprint to over 70 countries, boasting more than 30,000 stores worldwide. This phenomenal growth story is a testament to the company's strong business model and its ability to adapt to evolving consumer preferences. Now let's delve into its performance in the stock market. Starbucks went public in 1992, and since then, its stock has seen substantial growth. For instance, if you had invested $1,000 in Starbucks at its initial public offering or IPO today, that investment would be worth over $300,000. Quite impressive, isn't it? But what about dividends? Well, Starbucks announced its first dividend in 2010. Since then, it's been a steady performer, consistently increasing its dividend payouts. The company has a track record of raising its dividends annually for over a decade now. This consistency is one of the reasons why income-focused investors find Starbucks stock appealing. In its latest earnings report, Starbucks demonstrated resilience despite the global pandemic's challenges. The company's revenue for the fiscal year 2024 was over $28 billion, marking a significant recovery from the previous year's downturn. This strong rebound underscores Starbucks' robustness and its ability to bounce back, even in tough times. Another key financial achievement worth mentioning is Starbucks' return on equity, or ROE. The company's ROE has consistently been above the industry average, indicating that Starbucks is efficient at generating profits from its shareholders' equity. This is a positive sign for investors as it reflects the company's financial health and management effectiveness. However, like any investment, Starbucks does come with its share of risks. The company operates in a highly competitive market, and any change in consumer tastes or a downturn in the economy could impact its performance. But Starbucks has demonstrated its ability to navigate these challenges successfully, thanks to its strong brand, innovative product offerings, and strategic expansion plans. In conclusion, Starbucks Corporation has a compelling history, solid market performance, and a consistent dividend payout record. Its strong market presence combined with its ability to adapt and grow makes Starbucks a strong contender in the investment arena. But remember, investing always comes with a certain level of risk. Therefore, it's crucial to do your homework and consult with a financial advisor before making any investment decisions. Starbucks' strong market presence and steady dividend track record make it a viable investment option. As we move forward into the next scene, we'll be diving into the profile of another exciting dividend stock, the American Express Company. Stay tuned. Moving on, we have the American Express Company, a global American Express is listed on the New York Stock Exchange 7. Since then, the company has not just 2024, and the company marked another significant and increasing dividends, even during challenging times. The Amex name is synonymous with prestige, but also aligns with the values of many 20th century. Today, it stands tall as one of the leading players in the global payments industry. Let's turn our focus to the company's performance in the stock market. American Express is listed on the New York Stock Exchange under the ticker symbol AXP. Over the past 5 years, the company's share price has seen an upward trajectory, signifying steady growth and a strong market presence. This consistent performance has made American Express a favorite among many investors. Now, for those interested in dividends, let's take a look at American Express's dividend history. The company has a long track record of paying dividends, with its first dividend payment dating back to 1977. Since then, the company has not just maintained, but also grown its dividends. As of 2025, the company boasts a substantial dividend yield, making it an attractive choice for income-focused investors. In the realm of financial milestones, the American Express Company has had its fair share. For instance, in 2016, the company achieved a major milestone when it surpassed $100 billion in annual billed business for the first time. Fast forward to 2024, and the company marked another significant event by returning to its pre-pandemic growth levels, showcasing its resilience and adaptability. Despite the economic turbulence of the past decade, American Express has demonstrated a strong financial position. The company has consistently reported robust revenues and profits, backed by its solid business model and large, loyal customer base. This financial strength has allowed American Express to keep rewarding its shareholders with regular and increasing dividends, even during challenging times. Additionally, American Express has been proactive in adapting to changes in the financial landscape. The company has been investing heavily in digital initiatives to cater to the evolving needs of its customers. These strategic investments have not only helped American Express maintain its competitive edge, but also opened up new avenues for future growth. One of the key strengths of American Express is its brand. Ranked among the world's most valuable brands, the Amex name is synonymous with prestige, trust, and service. This strong brand image has played a pivotal role in the company's success and will likely continue to drive its growth in the future. It's also worth noting that American Express has a commendable record when it comes to corporate responsibility. The company has been recognized for its efforts in areas like environmental sustainability, community service, and workplace equality. This commitment to doing good not only enhances the company's reputation, but also aligns with the values of many modern investors. In conclusion, the American Express Company, with its strong financial health, reliable dividend payouts, and promising growth prospects, makes a compelling case for inclusion in your investment portfolio. Whether you're seeking steady income, long-term growth, or a mix of both, American Express could be just the ticket. American Express's strong financial health and reliable dividend payouts make it a potential gem in your investment portfolio. Last but not least, we have Lowe's Companies, Inc. Let's talk about Lowe's performance in the stock market. Increased its dividend for over 50 consecutive years. This is of significant financial milestones. Lowe's reached Lowe's stock price, further cementing its position as it emerged stronger, demonstrating its resilience. Impressive reputation for itself. It operates more than 2,000 home improvement and hardware stores across North America. This includes the United States, Canada, and Mexico. Quite the geographical spread, wouldn't you say? Let's talk about Lowe's performance in the stock market. Since it went public in the 1960s, Lowe's has been a consistent performer on the New York Stock Exchange. Even during periods of economic instability, Lowe's has managed to weather the storm and come out on top. This resilience is a testament to its strong business model and strategic decision-making. Now, onto its dividend history, which is a key aspect for any investor. Lowe's has been paying dividends since the 1960s, and what's even more impressive is that it has increased its dividend for over 50 consecutive years. This makes Lowe's a member of the prestigious Dividend Aristocrats, a select group of companies in the S&P 500 that have increased dividends every year for at least 25 years. Quite the accolade, wouldn't you agree? Over the past decade, Lowe's has more than tripled its dividend payout, demonstrating its commitment to returning capital to shareholders. In 2024, Lowe's announced a dividend increase of 15%, maintaining its track record of annual increases. In terms of significant financial milestones, Lowe's reached a pivotal point in 2019 when it reported annual sales of over $70 billion for the first time. This was a significant increase from the previous year and a clear indication of Lowe's growth trajectory. Another key event was in 2020 when the COVID-19 pandemic hit. While many businesses suffered, Lowe's saw an increase in sales as more people undertook home improvement projects during lockdowns. This boost in sales led to a surge in Lowe's stock price, further cementing its position as a strong performer in the market. In terms of future prospects, Lowe's is well positioned to continue its growth. It has a strong brand, a wide geographical presence, and a solid track record of performance. Furthermore, it operates in an industry that is expected to grow as people continue to invest in their homes. To sum it up, Lowe's Companies, Inc. has a rich history, a consistent market performance, and a strong dividend history. It has weathered economic storms and emerged stronger, demonstrating its resilience. Its impressive track record of dividend increases makes it an attractive option for dividend investors. But like any investment, it's important to do your own research and consider your financial goals and risk tolerance. After all, past performance is not indicative of future results. But based on its history and current standing, Lowe's certainly seems to have a lot to offer. Lowe's consistent market performance and generous dividend payouts make it a worthy contender for your portfolio. So, there you have it. The best 4 dividend stocks to buy shareholders makes it a solid pick for dividend investors. American Express has a long history of providing growth and sustained dividends, investing in these and investment goals before making any investment decision, securing your financial future. If you found this video holders, with its robust online presence and a network of stores across the nation, Target has proven itself a reliable player in the retail sector. Its steady growth and commitment to returning capital to shareholders makes it a solid pick for dividend investors. Next, we dove into SBUX Corporation, the global leader in specialty coffee. SBUX has a track record of increasing dividends and has shown resilience even amidst economic downturns. Its global footprint, coupled with a strong brand and innovative strategies, position it well for future growth and continued dividend payouts. Then we turned our attention to American Express Company, a household name in the financial services sector. American Express has a long history of providing steady dividends to its shareholders. Its strong brand, diverse revenue streams, and commitment to innovation make it a strong contender for a place in your dividend portfolio. Finally, we examined Lowe's Companies, Inc., a leader in the home improvement retail sector. Lowe's has been consistent in paying dividends and has a history of dividend growth. Its commitment to improving customer experience and expanding its digital capabilities signal potential for future growth and sustained dividends. Investing in these dividend stocks could offer multiple benefits. They can provide a steady income stream, even in volatile market conditions. In addition, they offer the potential for capital appreciation over the long term. However, it's important to remember that investing always comes with risks. These companies, like all publicly traded entities, face challenges and uncertainties. Therefore, it's critical to do your own research and consider your personal financial situation and investment goals before making any investment decisions. Consider factors like the company's financial health, its competitive position in the industry, and the sustainability of its dividend payouts. Look at the company's history, but don't forget to consider its future prospects. Remember, the goal is not just to invest, but to invest wisely. It's not just about picking the right stocks, but also about holding them for the right amount of time. And finally, it's not just about making money, but also about securing your financial future. If you found this video helpful, don't forget to subscribe, like, and share it with others. Stay tuned for more insightful investment content. Until next time, happy investing!